Hello and welcome to the very first episode of Ignite&Scale, the podcast where we deep dive into the stories of startup growth. I'm thrilled to kick off our series with special guests, the co-founders of Bumper, a company that's truly redefining the vehicle history space. Bumper has made significant strides, especially with the recent success of their Series B funding in a very challenging market. Today, we're going to explore their journey, the evolution of their strategies, and gather insights that are not only inspiring, but also immensely valuable for entrepreneurs and innovators out there. James, Jack, good afternoon.
Hi, Mike.
Good afternoon.
Thanks for having us.
Yeah, no problem. I mean, without further ado, perhaps you could both provide us with an intro into your respective backgrounds before we dive into some of the questions I've got for you.
Yeah, great. I'll kick off there, Mike. Yeah, so I'm the CEO and co-founder of Bumper. I started my career at an accountancy firm on a grad scheme at RSM, a kind of top 10 UK accountancy firm, and was involved in kind of auditing, management consultancy, kind of a variety of other roles there, before kind of pivoting my career a bit and moving into fast-growing tech startups. So I was at a company called Betfair, I was at Sky, I was also at Wonga, which is kind of a fintech. And then after that, I worked and helped run a portfolio business for a tech VC based out in London, and was involved there for a while until eventually being introduced to Jack and coming up with the concept of Bumper.
Cool. Yeah, I'll pick up there. So my background, automotive, I guess. So following university and a grad scheme in a different sector, I joined my family's business, the parent company called BTC, some of which people may have heard of, and perhaps more better known as one of their two SaaS platforms they had. They had one called Inquiry Max, and the one that's more relevant to what we do at Bumper, platform called Auto VHC, subsequently became a product under the banner of Snap-on, which was a vehicle health check tool, or is a vehicle health check tool that identifies repair work, prices up, and presents to the customer, which, as we'll explore a bit more perhaps on today, and certainly for what the industry may know us for, is kind of at the core of what we do, helping drivers say yes to more work, and ultimately, obviously, repairers convert more of that work. And it was through that platform and that business that I was introduced to James at the start of what we do today.
Yeah, I mean, just reflecting back on Bumper's journey, and I think I've known you guys for about 6 years now, and I remember as an advisor to the company working on some of the key selling messages with you. In fact, I think I sent you a copy of that a few days ago. But how is those key selling messages that were relevant then, how have they evolved into today's growth story? And are there any aspects that have remained constant, and what's shifted significantly?
Yeah, it's interesting. You did send that across. It was actually quite, it was interesting to reread that. I think what was encouraging is that things have moved on a lot in the way that we perhaps solve this problem. Perhaps in the technology that we utilize, both internally and externally, and within the dealer's tech stack as well. However, the core fundamental problem that we're solving is still a problem that very much exists today, as much as it did perhaps a few years ago. In certain cases, probably accelerated even more so, which is really around obviously the conversion of service and repair work and the affordability that's associated with that. And that's not to say this is always a totally distressed purchase. Obviously, for a lot of people, there can be an element of of convenience. Like they want to get more of the work done today, but perhaps stretching themselves to do so would be a problem. So from our point of view, we recognise that for dealers, you can have all of the parts available, you could have technician time available, you could even have courtesy cars available. But if the customer doesn't have the funds available or deems you too expensive, that's a difficult message to convey and ultimately to convert that work. Really what we're doing is addressing that core problem. And the way that we do that, as I say, has evolved. We're trying to make that whole transaction a better experience for all involved, and ultimately equals a much happier driver at the end of it, and greater customer retention is an outcome that we're laser focused on today as much as we were beforehand. What has evolved is the other payment products that we have around that as well. So that's our core buy now, pay later product that everyone knows us for, perhaps. But many of our retailers now also utilize our other payments products. So a pay by card product, facilitating credit and debit cards and an Apple Pay and Google Pay, etc. A pay by bank product, processing open banking transactions, and then most recently, what we call PayPad, so actual physical PDQ machines. So it's evolved to encapsulate any type of payment or any type of customer journey, but ultimately there's still a lot of consistency in the way that we do this.
And, in terms of the initial vision for the company, you've expanded the services as you've alluded to as well. But what were the most pivotal moments in your journey to date, would you say?
Well, I would probably say the big inflection point came from fully embedding our products into the software of dealers. Before it was a completely standalone product that relied on, the engagement of the service advisor. And, we're very fortunate that we have some incredibly engaged high users, kind of super users of our product. However, the nature of a service department, you have a lot of churn, a lot of people coming in, coming out, and for them always to be aware of the product and how it works is a challenge to scale. Whereas actually by embedding it into the vehicle health check process, the video platforms, the DMS systems, it really enabled us to scale without completely relying on the service advisor. So we had effectively two flows, a fully digital one that was completely within the hands of the consumer and they could approve the work and spread the cost or pay the full amount, and accommodate potentially a more digital focused consumer, as well as continuing to have our standalone product where a service advisor could process it face to face or over the telephone. So I think that was the big turning point when we could offer both those and to start to cater for a wider segment, a larger demographic, but also in dealers where the staff may not be as well trained or as knowledgeable or new to the business. Through these integrations, we were transacting without them. So that's really when we had a big takeoff moment and led to our first institutional investors for our Series A funding round.
And what would you say was the biggest or most interesting hurdle that you've overcome, whether that's operationally, strategically, financially?
Well, I think there's always hurdles to overcome. I think you feel like you've often overcome the kind of the biggest one, and then there's something else that comes around the corner. I probably think about the kind of the broader journey of us as a business. COVID, it's probably a common answer to that, was a major hurdle in the sense that clearly overnight, pretty much everyone's businesses were shut down, and we were not immune to that, albeit we still did trade to a small extent. But that massively, I guess, changed the way that we saw our business, but actually importantly, the way that our client base, the OEMs, the franchise groups, the retailers that we work with viewed it as well. So yes, COVID meant that there was obviously fewer vehicles going through workshops, but what it did mean coming out of it, it did change the way that a lot of those transactions took place. It certainly forced a lot of retailers to think about their digital journeys more. You physically couldn't have people coming on site, getting their cars repaired and ultimately paid for. Equally, it obviously put some pressure or changes on people's income as well. So look, very, very scary time for a fairly significant period for us as a business. But actually coming out of that, I think there was some long-term shifts within the industry, within the driver base, and obviously with us as well, that changed the way that people transact. So it created an openness around the conversation of affordability, and it was perhaps a more positive conversation to have. But equally, the digital journeys that James talked about there were perhaps more focused on optimized, and ultimately we sit at the core of that. And that definitely, I think, was a major hurdle that long term I think we've certainly benefited from in the way that we and our customer base have kind of addressed that coming out of it.
I guess, as you say, people started talking about cost of living crisis. People needed a solution to help them through that. And I guess, when you're offering a consistent service, which makes a lot of sense to the consumer as well, that perhaps came into its own as we came out of COVID. And you had the customer journey enhancements there to make it a kind of a seamless kind of transaction. I mean, just turning to the Series B, I mean, huge congratulations on that. They've been few and far between in the current market. What were the key kind of strategies or insights that helped you successfully secure that funding in what was, a very difficult funding environment?
Yeah, I think there were a number of elements to this. Firstly, only good businesses, without sounding kind of too arrogant, kind of only good businesses are getting funding right now. You need to have strong unit economics, good revenue growth. I mean, we're very fortunate that we've grown we've grown kind of over 10x since 2020. So, we've been doubling the business consistently for the last few years, which has really, really helped. I guess one of the other elements is that we've built up trust with our investors, particularly from the Series A. So we've every single month we have a big list of management KPIs that we set ourselves, targets, how we perform, with a long, quite detailed running commentary that we provide every investor. So I think that helped develop trust to show that we would do what we said we were going to do, and that we're kind of on top of our numbers. And we have a lot of kind of live reporting dashboards, again, that we have available to all our investors. So I think that helped. So, actually every investor we had from our Series A participated in our Series B, and actually a few of them doubled the amount they put in from the A to B. So that certainly helped. But being completely honest, it was a real numbers game as well, because we had to kiss a hell of a lot of frogs before we got yeses. And I think we were probably a bit naive on the VC world when we first started pitching, 5, 6, 7 years ago, and didn't quite appreciate just how many pitches you have to do until you get that yes. And our Series A was pretty similar. So it was having that determination every time you got a no, was just to pick yourself back up again 10 minutes later, do the same pitch to a brand new investor, and try and act as enthusiastic as you did previously. So it certainly wasn't always easy, and I think we had like 100 no's. I mean, it was getting pretty bleak, to be honest. But I think we still had belief in the product and the business, and I think the final point is that we raised when we were in a position of strength, when we were growing strongly, and we had a lot of cash in the bank. I think a big mistake founders make is leaving it until you have a 3-6 month runway. And then you really are beholden to that investor. And in this market, they're squeezing you for valuations at the best of times. But if you're suddenly running out of cash as well, it really puts you in that weak position. So we probably raised a year before we needed to. And looking back now, I think that was definitely the right decision.
I guess, look, the hard work must start again as well, with new investors, with existing investors doubling down on you as well. I know you're launching some new products. Are you able to kind of talk about any plans for 2024, and then maybe as a follow-up to that question, how you intend to leverage AI within that?
Yeah, as you said, I think as I touched on briefly, we are more than just a buy now, pay later company. Yes, it's at the core of what we do and it's what we're best known for, but we recognise that not every customer wants to spread the cost. They certainly want to transact digitally, but they may want to pay in full, which is why we introduced, actually that was related to COVID as well, where you physically couldn't come on site to transact, but we launched our pay by card product, so an SMS, email generated link, or obviously could be embedded into any of the platforms that we've mentioned already. That gives those people the ability to transact very quickly, digitally, at their convenience, and allows the retailer to secure payment without the customer having to come on site, or if they do come on site, adding to the queue of people and those pinch points at the start or end of a day for collection and drop off. We then subsequently have launched a pay by bank product. So I think people will be growingly familiar with open banking as a concept, but instant bank to bank transfers. Again, recognizing some of the shifts in the dealer ecosystem, obviously there's huge cost initiatives being put in place across all OEMs and retail partners. And we've got a massive ability to reduce their transaction fees. So open banking carries a much lower transaction fee, super secure, can facilitate instant payment. There's been a great reception to that product, and we're seeing it utilised on both sides of the car, both sales and after sales, which has been really exciting. And then the actual physical PDQ machines, which we call PayPad, they actually bring together all of our payment options into one physical terminal. So if you've got customers at the desk, whether they want to spread the cost, pay in full via card or open banking, we can facilitate that through a branded journey that fully reconciles within the DMS to the ledger accounts, etc. So a really exciting bit of tech, much more nascent than our other products, but something that we're looking at to roll out en masse. And then going back to kind of the other part of your question there about other markets, that the reason we've done some of the investment obviously is to grow the headcount. We recognise that we've got a big opportunity in all markets. We don't want to dilute our focus in the UK, so we're doubling down on our UK kind of team and infrastructure, but also adding to our headcount in Germany, Spain, the Netherlands, and Republic of Ireland, where fundamentally the problem that going back to the start of the call, that we're looking to solve, unsolved work, unexpected costs, potentially a bad customer outcome, lack of retention of older cars. That problem exists in those markets as much as it does here in the UK. So, we see that as an opportunity that we can capture from what we've learned here in the UK, and that's something that we're really excited about 2024 and becoming a truly international payments business, not solely just UK as well. James, I don't know if you want to pick up on the AI point there.
Yeah, I mean, we've actually always used elements of AI, for probably the last 4 or 5 years, kind of using machine learning for our underwriting. We have such big data sets that we process to really get the most out of that and optimize our accept rates and ensure we're lending responsibly and generating good arrears rates. It's important to leverage that technology. So that's always been kind of a pretty fundamental part of the business, and it really differentiates us to the kind of BNPL generalists who don't collect the same amounts of data. I mean, we collect the consumer finance data of the consumer, but also the vehicle types, the engine sizes, MOT performance, you name it, hundreds, if not thousands of additional data sets that really give us this unique insight. So that's one part, and that's only going to develop. And, as AI becomes more sophisticated, we'll be putting more elements of that into our underwriting and processing. I guess the exciting elements that we're using much more recently are kind of around marketing. So, when we do testimonial videos for the UK, within minutes you can generate German, Spanish, Dutch versions at incredibly good standards for pence, whereas before we would have spent thousands of pounds of having localized production teams filming it. So elements like that, all our SEO, all our content, a lot of our sales processes now leverage AI in terms of blanket emailing prospects across Europe, or writing very detailed, personalized messages. We've even been trying it in the call centers as well for some of the kind of more basic tests and requirements. So really, it should and is touching every part of the business. We had one of the UK's leading AI experts coming into the business and presenting to the whole company a couple of months ago, and we had a 2-hour workshop with our senior management team, again just making sure that we're learning best practice of how this can be leveraged within our space, but also being aware of some of the risks, ensuring that your own data is protected and secure and isn't available to the wider world. So there's certainly risks, but I think if you're going in there with your eyes open, have policies in place, protect your data, which is obviously incredibly crucial, then there's a lot of upside to it, and we're certainly excited about how we can continue to leverage it across the business.
And finally, just to wrap up, what's a single bit of advice that both of you individually would give entrepreneurs who are starting out or looking to scale their business, particularly in light of current market conditions?
I think from my side is obviously, while James and I are on today's podcast as the founders, I think there's obviously a wider team of people that are massively responsible for for what we do today, the growth of the business, the health of the business, like you say, in terms of current market conditions. I think for me, like one of the best things would be getting as best as possible a great team around you. A team of people that fundamentally you enjoy their company as well. When times are tough, and we've had some very, very tough times, I think you need to be able to rely on those people, and also, being able to spend time in their company is key. You do spend huge amounts of time. James and I, joking actually about the amount of time we've spent together of late is extensive. Perhaps doing a bit of time apart, arguably, but getting a good amount of people together. That's when you really kind of see the kind of true character of people. When times are good, everybody's happy to be, part of it. The whole success has many fathers kind of narrative. It's when times are hard and you really need to pull together. And I think we've got some great members of the team. We've got some super long-standing members of our senior team that are as responsible for the growth of the business. So for me, it'd be about getting the best people around you as possible.
Yeah, I mean, I completely agree with that. You need to be enjoying the work. You want to be coming into work, looking forward to it rather than kind of dreading it. So completely agree with that. I mean, I think the other characteristic is definitely tenacity. Yeah. I mean, we talked about the Series B. We'll have done hundreds of pitches during our Series B, probably a similar number at our Series A. It's when you have a no that you pick yourself back up again and keep that enthusiasm. So tenacity, and that definitely applies to the sales team. There's been so many groups over the years who said no, and then the 50th time in asking, it suddenly is a yes. So, I think that's been a huge part of Jack's success. Now have over 5,000 dealers is a huge testament to the success of him and his team. And I think the final point probably is, the expression that, perfection is the enemy of good. And that I do think founders of an idea try and make it perfect and spend hours and hours and hours thinking and strategizing without just actually getting on with it and doing it. And it might not be perfect on day one, but I think that action and taking a bit of a punt is the key to a successful founder. You need an MPV to get live, and trying to make something perfect that doesn't then have market fit could be too late. So you're much better getting things live, learning from them and improving them as you go, rather than trying to have this perfect product on day one.
100%. Well, gents, really appreciate your time and sharing some of those valuable insights, and hopefully have you on in the next 6 to 9 months. But thanks for your time. Much appreciated.
Yeah, no, cheers, Mike. Enjoy being on with you.
Yeah, thank you for having us, Mike.
If you want to listen to more episodes of the podcast, we're on all good audio platforms. Our website is also www.cambriaprivatecapital.com, and you can also find myself on LinkedIn and Twitter, where we publish our weekly blogs as well. Please do get in touch if you want more information.